Hello there everybody, a very good morning to you all and welcome back to HowToTrade.com and welcome back to another live stream here in our trading room and of course across our YouTube, Facebook, LinkedIn and X channels as well. It's a new week in the markets which hopefully means some really good new opportunities. So I hope everyone had a good weekend of rest unless of course you're trading crypto which is open over the weekend, but I don't, and hopefully fingers crossed we get some really nice moves in this week's price action. I've had a quick look, obviously, at the main things coming up this week, and it should be a very interesting week indeed. And we'll talk a little bit about that in the stream. It's the same stream as we normally do on a Monday morning. It's probably the most important stream of the week, actually. It might be the one which, as a trader, is the one which is the most tedious because it's the one where you're sort of preparing for what's to come rather than actually getting stuck into the action. But it's the most important because without proper preparation in your trading week, it just sets you off on the wrong foot, really. So we make sure that we have our prep on point, and that's what we're going to be doing in today's stream. So we're going to be looking at the top events and opportunities of the week. By top events, I mean economic events that we've got coming out in our schedules, and by opportunities, of course, I mean having a look at the actual charts and seeing if we can get some potentially good moves this week. So I'll have a look at pretty much my favourite trades of this week. Good morning to everyone who is here this morning. I know it's a Monday morning. People either hungover or tired from the weekend, and it's a Monday morning, so people might not be around, and that's fine. This is a stream which will be on catch up. So I'll drop it in one of my market analysis. I'll drop the link of the stream in there, and also you can watch it in the past stream section in our trading room as well. But good morning to you, Martin. Good to see you. Dillaby, good morning to you. Hope you had enjoyed your weekend as well, and thank you very much for the message. So let's not waste any time. Let's get stuck straight into it. So what we normally do on a Monday morning is we just load up our economic calendar. And the reason we load up our economic calendar is because, of course, it tells us really where the biggest or most, should we say, high impact news events are going to be over the next 7 days. So if you go onto our calendar and you click here on next 7 days and you filter that to high impact, you can see, why has that gone like that? That's weird. Oh, it's not really showing the Monday one. Anyway, let's talk about Monday's one. So overnight, basically, we had some, and I wanted to talk about this, some data out of China in the form of manufacturing PMIs. I'm not sure if you saw the stock index over the weekend. If I just quickly load that up. Look at this. Huge jump higher overnight from Friday's close up till pretty much 7 o'clock this morning. The CHN 50 was up 6.5%, including the gap. So as you may or may not know, China introduced a massive stimulus package. A few days ago, this come in. At last, China pulls the trigger on a bold stimulus package, and that's the reason why we saw, as a result, Asian stocks really rallying off the back of that. That was Thursday last week, and they were already up. We're up sort of 15% from when that stimulus package was actually announced. So you can see how stimulus packages have such a massive impact on stock markets. The Hang Seng as well, look at that, gapped up overnight as well. That's up a little bit less at 2.43%, but it was quite a positive start to Monday morning in Asia, I guess because people had a little bit of FOMO. They knew about the stimulus package and they sort of wanted to jump into those Asian stocks straight away. However, the PMI data that come out of China wasn't very, or it basically explained to us maybe why these stimulus packages are coming out, because the manufacturing PMI, which is basically, let's just call it the health of the manufacturing sector in China, actually fell into contraction territory, which is basically where you get a figure below 50. The previous was 50.4 and we've got 49.3. So that's a weakening in the manufacturing sector in China, and also in the services sector. We're just about just pretty much neutral 51.6, but we actually got 50.3. So a weakening in the services sector as well. So that's probably why you see these little dip. So obviously we had that positive move over the weekend, but that gap's starting to be filled, and that's probably because we saw quite a, not the best reading in the world when it comes to the health of the two main pillars of the economy, the manufacturing and the services sector. To add to that as well, GDP figures out of the UK also came in quite low, 0.7% year on year compared to 0.9% as the previous, and 0.5% on the quarter on quarter compared to 0.6% on the previous as well. And I would imagine that the pound I'm interested in that move. I'm not sure in that move at all. The pound actually rallied as a result of that. That's very interesting. You would have expected that the pound maybe would have sold off somewhat off the back of that. But it hasn't. But you can see on the likes of the Japanese yen, we're just starting to get the signs of weakness. Not really seeing it on the on cable yet, are we? Despite that RSI divergence, I actually think that potentially what we could be seeing is this cable chart starting to top out here. Now you can actually see on this high, we've got a little bit of a liquidity sweep there. And you can see we've just opened this 4-hour candle slightly lower. Hello to you, Clive, as well. Good to see you. Thank you very much for the message. I hope you're doing well. You can see this is starting to act as resistance now between this 1.34 and 1.343. There isn't a great deal of evidence, to be honest, because you can still see, there's not really signs of a break in structure. I would say that if we can get probably a close below any of these lows, particularly this one, if we can get a close below there, then we can look for a retest at some point and maybe look to play that lower, because there is higher time frame divergence as well, bearish divergence actually on the RSI. I don't know if you've seen that. Look at the daily, really clean bearish divergence here coming through. Look at that. It's actually really strong divergence as well. So this is a counter trend thing. People may say to me, I thought that you just follow the trend. I do. I'm not saying that, I'm going full risk on this at all. I'm just starting to see signs. And with that weaker GDP print as well out of the UK, I'm just potentially seeing signs of maybe some weakness in the pound to come. The reason the pound is being kept at the high it is because the Bank of England have remained less dovish than the Federal Reserve. That's already priced in now. That's expected. So we could expect more of the same, but also at the same time, it's not going to take a lot in either direction to change that goalpost and then see a fall in the likes of the cable, or maybe even the pound Japanese yen if you didn't want to play it against the dollar, because obviously the dollar's quite weak at the moment. And I say at the moment because it could be turning around as well. So yeah, that's interesting to see. Tuesday, October the 1st, so it's a new month in the markets. So today might be quite busy because we get month-end flows, which basically means when the large institutions or big banks or large players in the market close out their positions for the month. When that position's closed, it can cause a sort of some random volatility spikes in the market. So be careful about that, because today is the last day of September and tomorrow we move into a new month of trading. In that new month of trading, on the first day, we've got consumer price index data out of Europe. So that's going to be interesting to see the state of inflation. As I've said before, inflation data is normally, like, we used to inflation data being really so important. However, I do expect that what's happening now is we're shifting into a period where employment data is more important than inflation data, because we know that inflation is falling. Look, the year-on-year figure is expected to be at 2%. If it's at 2.2, it's still around the target of these central banks. So that's the most important thing. But again, we could get some volatility in the euro, some short-term scalping opportunities potentially on that consumer price index data. ISM manufacturing PMIs, that's a big one in the US tomorrow at 3 o'clock. See if the manufacturing PMI is going to continue, see if the manufacturing sector in the US is going to continue to deteriorate like it is in China, or if we're going to see a little bit of a bounce. That would be interesting to see whether we get any more of that. And then really, as we head into the back end of the week, so like your Thursdays and Fridays, Thursday's going to be one of those days where it's like the calm before the storm, I think. It's typical of a Thursday before NFP day. We've got the ADP employment change, and there's consumer price index data out of Switzerland and some trade balance out of Australia. It's not going to do a great deal, if I'm being honest. What's going to do a great deal is this. I cannot stress the importance enough of this non-farm payrolls report on Friday. It's the first non-farm payrolls report since the Federal Reserve decided to cut 50 basis points. If that non-farm payrolls data comes in weak, expect carnage. We will do a full breakdown of non-farm payrolls. I'm going to do it on Thursday because I'm actually not here from Friday. I'll talk about that in just a second. I'm away for a week. So I'll do the breakdown for non-farm payrolls on Thursday, and Shane will cover the event live. But yeah, just my early thoughts are expect absolute carnage, and I mean probably a lot of stock market weakness, a lot of dollar weakness should the data come in weaker. Should the data come in roughly around where it is, / a little bit stronger, say we get that non-farm payrolls at 160 or something, that's going to calm the nerves of everybody, and that's going to fuel that soft landing narrative again, and we should then expect more of the same, especially in the stock market, to be fair. Hello to you, Bobby, as well. Good to see you. So that was your breakdown for your top events. Now, you'll probably notice in the streaming schedule for this week is that I'm not going to be here on Friday. And the reason I'm not here on Friday is because I'm actually away. I'm on holiday for a week, so I'm streaming up until Thursday. So on Thursday, normally on Friday morning, I'll do a non-farm payrolls preview stream, but I'm going to be doing that on Thursday instead. So that really is, the must-watch of the week, shall we say. All right then, let's start with the NASDAQ. Okay. Let's start with the NASDAQ. Daily time frame. You can see we've got, let's say we got a new high that's been printed, basically a new leg in the market, which is from here up to here. That means that if we can get, and I say if, we can get a move down to 19,560, that's the 38.2 of that leg higher. Is there any equal lows there as well? That would be amazing. This would be an amazing buy the dip opportunity if there was more of a significant dip, which is possible, down around where this 61.8 is. You can see the 50% of the fair value gap. That's a good confluence for me to look for something. Difficulty is with the stop loss. It's quite big. It's quite big, isn't it? Let's drop down onto the hour. You haven't really got a choice. That's the only thing with that trade. You need to really cover that wick. It's not the best RR in the world, if I'm being brutally honest. 2-1. Might have to be that we wait for a move down to that area and then wait for a lower time frame reaction if you want to access greater risk reward, to be honest, on that one. But either way, I remain bullish on the stock market until I see evidence of anything else, which means that it's about trying to cash in on any dips that we get, really. And if you look at if I get rid of these, I don't want them. That's making everything confusing. You can see we're now currently, we're pushing on where the previous high that was broken. People who trade break and retest will probably say, well, that's enough support for me. And really my upside potential for the NASDAQ this week is this daily area up here at 20,500. If it's a more positive week for the stock market, if the jobs data is fairly strong and there's not, and we get more of the same basically, then that's my upside potential. My downside potential is down at 19,500, maybe even 19,300, potentially 19,000. Should there be a significant weakening in this index. So I still remain bullish on that. A little bit of a difficult market to trade at the current levels. You can see that we are at the moment trading within a bullish order block here. There's also some support down here at 18,900 as well. There's plenty of support here on the on the hourly time frames. So look out for that, because we might even get this, or it could go from here. You can see we've taken out those equal lows. It might even, go from here. So watch out for that one, because that move could be coming pretty soon. If these support areas hold, should they not hold, should all of these be broken, well then actually we've got quite a lot of downside potential, as I say, at least down to 19,558. So these areas are quite important at the moment, to be honest with you. The dollar index, as you can see, is a really, really tough buy at the moment. And we've spoken about this in a lot of detail over the last couple of weeks on how this area that we're in is a higher time frame support area. It has been for quite some time, and that's why you sort of see this bit of choppy grinding price action around it. It doesn't look good, does it? It doesn't really look like a market which is going to bounce anytime soon. But I would say that what we could get is a breakdown to, we might even wick below 100, and then we should see support around there. But I'm speculating on that. I'm not saying that's necessarily going to happen, but we could see support around 100 for the dollar index, because it's such a whole number. It's a psychological support area. It's been a support area for quite some time. Yeah, and the dollar is quite massively overextended to the downside. It has been really since the trend began in June. So I would rather stay with the trend and look to fade the dollar at any opportunities. But I am mindful of the fact that we could see some sort of bounce around this 100 level in the next coming days. Dollar yen, I think if you're going to play the dollar weakness story, dollar yen looks great. It's a bit of a mess down there at the moment, and you can see that we've already invalidated this support area, this blue box. We tapped into that one, and you can see there's been a bit of a bounce. This is definitely a market where you want to really try and be following the trend as much as possible. There is a lot of support coming in between 138 and 141. That's why it's really struggled to break down below. But with what happened last week with that new Prime Minister in Japan, people think that he's a lot more hawkish in nature, and so that's why we saw dollar yen sell off quite significantly from this area. So until we get a break to the top side of 145 and 146, it's a market that we're going to continue to try and sell and fade any rallies that we get, like the rallies we're seeing at the moment. How much have they truly got left in them? In fact, you can already see that we're trading right into a nice support area here as well. Okay, so yeah, gonna look to try and fade dollar yen as much as possible, to be fair. And with gold, I think finally what we might be seeing is gold potentially having formed its new high, start to maybe make a move lower, but I'm not sure how much longer, how much lower it could go. But here's my fib here's my fib from this low up to the high at 2684. I'm not looking to sell gold. I'm just waiting for a decent pullback to look to try and continue the trend. So those pullbacks could be at 2630, where the 38.2 is, or my preferred one is down at 2600. The reason is because the 2600 level, obviously psychological whole number support, and also the 61.8 is a really good confluence. I've actually got an alert set there on gold. Hopefully we can get a test of that. It's at 2650 at the moment, so we might have to wait a couple of days for it, but not looking to sell gold. We're bullish, you know, the market structure is clearly bullish, but I'm mindful of the fact of trying to buy it at these highs after how much it's already gone. And I remain patient in gold, trying to wait for a decent enough pullback to get in, and I think 2600 would be really, really nice support level for gold as well. Okay, good stuff. In fact, I do like the look of that. I do like the look of that USD yen play the more I look at it as well. Interesting. Okay, just check if there's any questions or anything. That was really... Here we go. Marv, Kaikon, is it better to take advantage of such NFPs the following day or just wait a few hours after the report? Thanks. Marv, I would say that if NFP comes in, you know, quite a way away from its expectation, then the trend move that's going to happen normally happens on that day. Should the data come in, you know, 10% in either way or something like that, or, you know, nothing drastic, normally the trend move can happen the next day, or it'll be the next week on Monday. So just have a look. Sometimes that's why it's good to know what the figure is as it comes out, because if it comes out and it's significantly weaker or it's significantly stronger, you have to try and get in straight away, really, as much as possible, because the trend move normally just continues and happens from the off. But if the figure's not too crazy, then it's a good idea to wait for the volatility to settle down first. Any other questions? Okay, amazing. Right. I'm going to go and post this dollar yen opportunity in the trading room for you. So that's your breakdown of the week. There will be new things that crop up, and when those new things are coming, obviously I will update you accordingly. We've broken down the top events and opportunities of this week. I'm not, obviously, to summarize it, NFP on Friday obviously is the one. But there is some good stuff coming out before that as well, in the form of PMIs out of the US and other employment data as well, and European inflation as well. So it's not going to be a slow week. It just might be a little bit tentative as we wait for that Friday report. So yeah, I'll be streaming every single day, same time, same place. So hopefully I'll see you all tomorrow. Tomorrow's stream is going to be, I'm going to be live trading stocks and gold. So feel free to come and join me then. Any other questions, message me in the room and I'll be more than happy to